Everybody, it's Blake here. As always, none of this is financial advice. Trade and invest at your own risk. This video is designed to help you get prepared for this week's trading and give you some insights into how I'm looking at this market. So without further ado, let's get it started here. Today we're going to start on the higher time frames just so we can kind of have a better idea of what's happening at the macro level. So on a monthly time frame, we're still in a massive downtrend, but we are still holding this 50-week moving average, which also does coincide pretty much with the 200-day moving average on SPY. So a very important level to keep an eye on. If we break below last month's low, I think it's, like I said, it's inevitable. We probably come down and test this level down here. And if we break that, that's not good. It hasn't been good in the past. The last time we actually had multiple candle closes below that was the 2008 crash. So we don't want to see that happen. And we're right in a fine line right here where we are right now. So we're at an inflection point. So what's this look like on the weekly time frame? Again, once again, major downtrend. So far we have time frame alignment on the monthly and weekly time frames as in downtrends. And we talked about these June lows last week. So we said, hey, don't expect these lows to be the bottom. Don't expect the bottom to be in. We might get an uptrend, but don't expect it to be the bottom. And the reason that I said that was because of the way we closed the previous week. We did confirm price weakness below the June low. So that was not how we wanted to close out, not last week, but the previous week. Last week wasn't great either. So zooming in on the daily time frame, so you can see I had mentioned these June lows. If you guys go rewind the tape and look at last week's video, I'd mentioned these June lows. And I said, hey, look, it's really hard to short down here because we are in a prolonged downtrend and we are oversold on the NYMO. So we were expecting a bounce, right? We got that bounce, pretty much immediately to start the week. Monday was green, Tuesday gap up, close inside the cloud. This is a powerful candle on Tuesday. And then Wednesday, we needed to close above this Tuesday's high in order to confirm an uptrend. So on Wednesday, we actually did trade above it, but pretty much as soon as we did trade above it, we came right back down and closed inside of the previous day's high. So I know in our playbook, I did put us, hey, this is an uptrend. This was close enough for me to call this an uptrend. Technically speaking, if we're being strict with our rules, still technically no trend because we had a single day close inside the cloud, and then we didn't have price strength confirmation to confirm that uptrend above the October 4 candle's high. We actually closed below that. So technically speaking, still in no trend. And as always, you guys know in no trend and downtrend, number one priority is preservation of capital. But I thought this was a pretty solid move after seeing Monday and Tuesday's price action. I thought Wednesday was a rest day. Thursday, we started to see a little more weakness. I said, hey, it's not the type of price action that you want to see. As long as we hold this cloud, really no technical damage is done. And then, Friday was just ugly. We gapped down. We tagged the bottom of the cloud, which is the 10 SMA. Once we started breaking below that and going, back into, no trend below the cloud, it was definitely time to, rethink the longs if you guys were long anything. And thankfully, our focus this week was in energy, and energy actually did pay us. So hopefully you got, some XLE or some COP or one of those trades. And yes, SPY didn't work, right? We had a 5-minute candle close above the October 4 high, but the daily, as on the playbook that goes out every Monday through Friday, on there it says, hey, in order for a trade to officially trigger, we got to close above the trigger price. We didn't close above that. So maybe you didn't. Maybe you were in SPY and got out of SPY. I don't know. Hopefully you were able to, minimize your losses and take some paper cuts if you did get in SPY. But then, on Friday, once again, right back to testing these June lows. So this is a very, very important level. If we break Friday's low, October 7th low. I think it's extremely probable that we come and test the September 30 low. And, at that point, the bear market's really in full force, right? We really needed to see some sort of continuation in here to at least maybe get up to that 50-day moving average, consolidate, and then maybe a move higher. That would have been very constructive and would have gotten me very bullish. But that's not what the market gave us, right? So the market is extremely difficult to trade right now. If you are inexperienced or having trouble, let off the gas pedal, okay? This is, like I said, not an easy market, and these uptrends are going to be uptrends that are on a macro level in the weekly and monthly time frame still counter trend trades, even on the daily time frame if we get an uptrend. So you got to have that in the back of your head whenever you're trading, understanding that, hey, the higher time frames, the macro trend is still down. So, if I'm seeing green on my trade, I might be a little quicker to take some profits, and I might be a little quicker to raise my stop on anything on the long side. So, yeah, this week we're back below the clouds. So the trades on the playbook are going to be on the short side because we trade in agreement with the market, right? We don't tell the market what to do. The market tells us what to do. And right now we have a downtrend on the monthly, weekly, and daily time frames. So trying to go long here is counter trend. So you guys know I don't love to short the market. It's much easier for me anyways to be long in uptrends. And that's really what's, kept me around for, the past decade almost. So be very cautious of this market, right? You don't need to be a hero. This is not the type of market where you're, looking to double your account size. This is the type of market where you're just trying to, protect your capital and have enough ammunition, left in the gun for when we do actually get a major uptrend. You've got enough ammunition to really hit it hard. So that's the strategy for this week. Don't be a hero. Don't be aggressive. Have some patience and wait for better odds. Right now, the odds are really stacked against us. I talked about the 200-week moving average. Sorry if I misspoke previously when I was bringing up the monthly. I said the 200-day. We're well below the 200-day. I meant the 200-week moving average. So this is a very interesting level here. So those of you that are investors and traders, I'm sure you've heard people talk about the 200-period moving average. It's a very important moving average that a lot of people look at. So on this weekly time frame, we briefly dipped below it, back when we had the COVID crash and, V-shaped recovery quickly right after that. The last time, we pretty much, we did touch it back here in 2018. I think that was Brexit. And then back here in 2016, that was getting a little top heavy. Back here in 2011, we touched it. So we've held these, significant pullbacks. So if we hold this, this could, wind up being just another major pullback. But we've talked about levels in the past of, hey, where would I get, extremely bullish? Where would I get extremely aggressive? We've talked about those levels, right? This is not the area to be buying the dip when we've got downtrends on multiple time frames. Just not our strategy, not our not our trading style. For some people, it is not ours. So going back to this 200-week moving average, the last time that we really broke below it was back in this 2008 crash, right? And so we broke below it. We tested it, came back up, test the declining 50-day moving average, break below, test the 200, and then it was just, let's roll over. But we spent, from June of 2008 until November of 2010. Okay, so that's a significant amount of time trading below this 200-week moving average. And you can see, pretty much everything below this was very sloppy, difficult trading. Maybe you could have got in above this cloud here and rode this trend. But who knows? Maybe you would have gotten stopped out on these, candles over here. Needless to say, this 200-week moving average is extremely important. And if we do close below and we see multiple closes below this 200-week moving average, I'm going to expect the worst. I'm going to expect this is going to be maybe a 2008 or a 2001 where we do spend, a year and a half, below this 200-week moving average. So, it's very, very important to remain open-minded and remain defensive of your capital until we can see some better odds. Right now, these odds are terrible. So I wanted to bring up that 200-week moving average. I thought that was something significant that we should discuss in this week's video. A couple more things I just want to chat about real quick, and we'll wrap it up. Obviously, XLE Energy was showing relative strength. This was a very good trade for us. We had a trigger above, the October 3rd high, wound up gapping up. But you guys know whenever we gap up, you can take 5-minute RT long if it does gap up on you. And that traded really nicely for us. We also had a COP, I believe. Yeah, COP also showing a lot of relative strength. Another good trade for us. One thing that I think we might take a look at this week is maybe USO. So USO is, looking pretty strong as well. Back above the cloud. We've seen, a really strong rally. We've come really far, really fast. We've come from 63 to, 75. So that's a large percentage move just over the course of a few weeks. So it wouldn't surprise me if we see some sort of pullback and then a move higher. But I do like this USO, and I do still like energy. So that's, really going to be our focus if we're looking for anything on the long side. Lastly, you guys know I'm a crypto fan, so Bitcoin just hasn't really done much. We're still kind of just grinding sideways below this cloud. Ethereum, very similar story, grinding sideways below this cloud. Who knows if and when? I think, the if is not a question, but the when is, in my opinion, when crypto will diverge from equities. So when is the correlation going to not be so correlated with the stock market? Because currently the stock market's not looking great. And if the crypto trades like the stock market, well, the stock market's probably not going to do great either with crypto. So like I said before, if your time frame is anything over 3 years, I think these are fine levels to accumulate. But for a trade, maybe not. Just to wrap up, S&P is in a downtrend on the monthly and weekly, and we're heading towards a downtrend on the daily time frame below this cloud, back to the June lows. I think anything below Friday's low, look out below. See you on the open. You guys take it safe this week. Preserve capital. Don't be in a rush. And I'll see you on the open.